Um, First of all, before I introduce anybody or myself or anybody else, I'm super excited, Steve. You're one of my mentor, and it almost feels like you know, dream come true, having my mentor on my podcast. So, uh, without further delay, good afternoon, everybody. My name is Sid Shamin. If you are on this show or listening or going to listen on YouTube or Spotify or Apple. We have about 6,000 people in our database. Every Wednesday, we bring um, one of our guests to add value. If you are looking for answers, expanding your horizon towards financial freedom, building legacy, or builds multiple stream of income, this is the webcast that you want to be a part of every Wednesday. Without further delay, I have my mentor with me, Steve Davis. Needs no introduction. If you are in Houston or Texas in general, you know who Steve Davis is. He, I met with him in 2011, and it was a funny incident, but I'm going to go into that detail later. He been a radio star. He been a podcast star. I think you've got the most number of episodes that I've ever seen on a webcast and podcast. So, you know, today is the day for me to stay quiet and let Steve do his magic. He runs a community of investors called Total Wealth Academy. He'll talk about that in a little bit. And he also runs not only a podcast show but a radio show. Um, and I think if I'm not wrong, Steve, I don't want to exaggerate, but directly or indirectly, you may have touched a million people and their lives and their livelihood over the last 30, 35 years. Is that correct?
Yeah, that's by the time you share TV, radio, and 34 years as a mentor, I'm sure that a million people at least have heard the message.
Probably more. Yeah.
Yeah.
So without further delay, today's topic that Steve's favorite topic. Dumb Doctor Deal. We renamed it to Dumb Deal because my wife is a doctor, so we didn't want to offend her. Um, and this topic is about really figuring out why education is important, why so many good deals go bad, why smart people like doctors and physicians and surgeons and CPAs and all other very technical profession still lose money. So, Steve, I want you to introduce yourself in your own words. Please go ahead. The stage is yours.
Well, I'm Steve Davis, and I am the founder of Total Wealth Academy. I've been a real estate investor for about 35 years, and I'm one of those guys that started with bad credit and no money. I was furious with what was going on in corporate America, dissatisfied with my income, dissatisfied with my quality of lifestyle. So I started investing in real estate, started off as a wholesaler, then a flipper, then single family rental, then little apartment complexes, 10, 20, 30, 40 units. And I eventually ended up investing in the big apartment complexes, 200 to 500 units. And at one time, I was invested in about 4,000 apartment units. But my favorite thing is the mentoring. I love to teach. I love to share new ideas. I like to once in a while come up with a good new idea myself and share it. Um, but this subject, like you said, it's one of my favorite subjects. But people need to understand that it's mostly psychological.
Yeah.
That's where bad deals come from. It's the psychology of the investor. And I think we'll get heavy into that today so
Yeah.
that people can look at themselves and go, hey, that's a characteristic of mine. I need to change it.
Yeah. Awesome. No, I think um, tell us a little bit more about Total Well Academy. Give us a good gist of, what you offer, how you help people.
Sure. Total Wealth Academy is an education and mentoring group for real estate investors. We train everybody, no matter what their experience level. We have people come in that have never owned a piece of real estate, rental real estate before, the beginners. And we have people come in that already own 4,000 units. They want to just take it to the next level. And what we do is take people by the hand and walk them through their first few deals till they know what they're doing.
Correct.
We have over 80 hours of online training. There's a Saturday class that I give live. There's unlimited question and answer through email and occasionally phone if it's an emergency.
Yeah.
Uh, and we're investing in everything from, again, single family homes to big apartment complexes, self storage, senior living, strip shopping centers, city centers. You know, if it's backed by real estate and it produces cash flow, we're probably in that space investing.
Awesome. And they can get to you via your website,
Yeah,
totalwealthacademy.com.
that one's easy. TotalWealthAcademy.com is the first step for anybody interested in learning how to invest effectively in real estate.
Yeah.
Total,
The easiest
TotalWealthAcademy.com.
the easiest way is to look for Steve Davis. You look for Steve Davis, you'll get to it.
Yeah.
You might come up earlier than totalwealthacademy.com. All right, cool. Steve, I want to start. Obviously, we're going to talk about um, good deals, bad deals, why smart people do bad deals, and everything in between. I mean, you've talked about this topic so many times in so many different flavors and from different angles. I want to step back a little bit. I want to ask you, where do you think we are in the current state of market, real estate market, and how do you see this interpreting into even more good or bad deals in your opinion?
Well, in my opinion, I think we're going to see a lot of really good opportunities coming up in the near future. I think that the side effects or after effects, I should say, of COVID destroyed a lot of deals when the government came in and just started raising the interest rate, which, you know, arguably they had to do it because of the problem with inflation. But it set off a chain reaction that killed a lot of deals, a lot of real estate investor deals because of that high interest rate. But
Correct.
that's in the past now. And there's a lot of people wanting to liquidate their assets. A lot of people are coming up on the 5 year anniversary and they need to sell it. And so when you've got a situation where you've got a lot of people being forced to sell for whatever reason, that's when you see really good opportunities. So I think the next 12 to 18 months, we're going to see some remarkable deals go down. And I think we're going to have a 12 to 18 month window to take advantage of it before it shifts into another market.
And when you speak about those opportunities, you're broadly speaking for almost all asset types, meaning single family, multifamily, strip, senior housing,
Yeah.
and okay.
We're buying, our students are buying more zero down. Let me say that one more time because people, they're so used to putting 20% down or more
Yeah,
on investment property. But right now, because the prices are so low and there's so few people buying, the investors have the advantage. And we're buying more zero down deals right now than we've bought in the last probably 4 years.
yeah,
When it comes to the apartments, I'm seeing discounts 20%, 30%. Even saw one that was 40% below what it sold for just a few years ago. You
yeah.
know, during the right after the pandemic when all the prices went crazy and people lost their minds, which was a shock to me, but that was all psychological too.
Correct.
You know, it was, oh, the prices are going to go up. They're never going to stop going up. That's a psychological problem because real estate goes up and down.
Yeah,
And you need to be aware of that and have that as part of your business model or business plan is the
correct.
understanding that it's going to go up and down, not just up.
Yeah. Imagine if you say this to a rocket scientist or a physician or a brain surgeon that you have to have a business plan that makes money in good market as well as bad market, they'll lose their mind because They're super smart people, but they don't know. And that's where education comes in. That's where you're a big proponent of being educated before you spend even a dollar. Um, with I also want to second your thought or your opinion about the down market coming back up in next 12 to 18 months is that's exactly where most of the investors, either passive or active, they need to know what's happening in the market, and they need to, even if they're not investing, they need to get educated, right? They may not pull a trigger based on their, like you said, psychology or their philosophy, but they still have to get educated because even investing in a good market where deals are awesome, prices are down, and if you invested without education, you lose money, right?
Yes.
Awesome.
Yes. So many people are out there just throwing their money at any deal that comes across their plate, and they're not doing the research. They don't understand how to read a PPM. They don't understand how to read the operating agreement, and they certainly don't know how to look at a P&L and underwrite an apartment or self-storage or even a single family house. And they just, hey,
Yeah,
it's real estate. It'll work, and they throw money at it. No, that's not true. Every real estate deal does not work.
absolutely, absolutely. Um, See, I want to take your opinion on, along the same lines. A lot of professionals who have savings they see that this financial freedom is never gonna be easy or be a reality until they're just waiting or depending on one source of income. I want to get your opinion. You have talked about it millions of times. Say it one more time for our audience.
Yeah.
What's the biggest risk as a professional I'm taking? I mean, if I'm relying on just one stream of income, probably that's my biggest risk.
Yeah, I think you've got to go to Warren Buffett when we talk about the the risk involved in just having a single source of income. Warren Buffett, billionaire, great businessman,
Yeah.
and a great guy. He said this: never depend on a sole source of income. Always invest to create a second source. So people will think, well, he's talking about stocks, mutual funds, gold, silver, crypto, and he's not. He's talking about income producing assets like you buy, Sid,
Hmm.
that produce cash flow. And that's how you reduce your risk dramatically. So if you are a professional and you're self-employed, that's a great position to be in, don't get me wrong,
Right.
but it's still one source of income, and that's dangerous.
Correct.
You've got to build a second source of income minimum if you're going to have any safety in the marketplace and if you're ever going to retire.
Absolutely. It, Share your thoughts. And that's where the complication hits. When you look at a deal, be it a single family or multifamily or any other deal, how do you really help or decipher, right? Hey, what is speculation and what's truly it's going to be the results based on the experience, your bunch of experience, but simplify for our audience.
The way we do it is the members have unlimited question and answer with us. So as they do their deals, let's take a single family deal.
Correct.
They find a single family deal. We have a spreadsheet where they put in all the numbers, all the expenses to purchase it, the holding costs, the rental amount, or if
Yeah.
it's a flip, whatever. And that spreadsheet will tell you if it's a good deal or not. Then they email that spreadsheet to their mentor. Their mentor reviews it, make sure they didn't miss anything or put something on the wrong line or whatever, and send it back to them with a, yeah, this looks like a good deal. You should probably move forward on it, or a no, here's why. And we explain it to them. When it comes to the passive investors, we have on top of the 80 hours of training, if somebody's going to be a passive investor and invest in one of your deals or another sponsor's deals, they've got an additional 16 hours of training on how to underwrite, how to read a PPM operating agreement, how to understand IRR, ARR, cash flow, cash on cash rate of return. And they get to literally ask me my thoughts on the deal,
Got it. Yeah.
and I give them my opinion. Now, I can't be responsible for their final decision, but I can certainly say, hey, this deal looks like a good risk, or no, I don't like this deal, and here's why.
Got it.
So that's how we help people get into deals, whether it's active in single family or passive in these big apartments.
Yeah. It's so crazy if you think about it, right? You can't go and do somebody's taxes without proper education,
Right.
training, certification. You can't go operate on a patient. But when it comes to investment, this is just the least regulated in terms of education
Yep.
field. And you just talk about 80 hours of training plus an educated or experienced mentor that's looking at the deal. And then top of it, when somebody's trying to just being a passive investor, you also get engaged in make sure they're reading it through correctly based on your training. Speak to us a little bit more about who should, in your opinion, be active investor versus a passive investor,
Yeah, that's
especially
a tough one.
yeah,
And the reason is that single family is so effective. It is insanely effective. Um, I think if you do an IRR on a single family house, the rates of return are 30, 40, 50%. I've seen them in the hundreds of percent. And I'm not just saying once in a while. I've seen it over and over and over and over
yeah,
again. You know, when you buy a house for $10,000 down and you pick up $50,000 equity, that's a 500% rate of
yes, sir.
return. So if a person has less than, say, 50 grand,
Mhm.
they should really be active and start with single family. If a person has 100 grand, 200 grand, and or higher, they really should look at passive investing or a combination of single family, which is active,
Correct.
and passive investing in the apartments. So, and one of the reasons is because that those single family houses just throw off cash flow like crazy. You know, you put those things on autopilot. If you know how to screen tenants properly, you know how to write leases, you know how to manage. When you put somebody in, you don't see that property for 2 or 3 years.
Correct.
I've got one family that's been with me for 17 years. They've
Same,
practically paid
same
off
single
the
family.
house.
Wow.
Crazy.
Yeah,
Um, so, in answer to your question, you really need to get with a mentor, write down your goals, let the mentor see them, and then they can advise you, hey, I would start with single family or I would start with passive investing.
absolutely. Yeah. And this is where I was going to because a lot of times, even though I've seen people who have good savings, good job, and they still want to do things that does not suit their lifestyle, meaning they're busy, right? If a surgeon comes to you and say, "Hey, I really want to make more money and I really want to do a single family home," well, you're a brain surgeon. How much do you have time? And we've seen those cases over and over again. So yeah, just pointing out the fact that you somebody understanding their own personal goals or personal goal meaning where they are and what's the lifestyle they can really afford, meaning time, right? How much time they're going to invest and how much money they've got. That's a big factor to know where you want to be active and passive. But just not that, speaking with a mentor is extremely important. If you don't have an education, you're definitely going to make a mistake. And um, all of this, where people are trying to make multiple stream of income, leads towards financial freedom, right? Um, some people say, hey, if you can meet your monthly expenses, you're financially free.
Yeah.
If you are more than that, so, you know, instead of me giving that definition, I want you to speak up your opinion in terms of what you see as a financial freedom for anybody.
In other words, let's say that your bills are $4,000 a month, 5,000, we'll
Mhm.
say 5,000 to keep the numbers easy.
Correct.
As soon as you have $5,000 a month in passive income or semi-passive with your single family, you're, like you said, you're technically financially independent. All your bills are paid. You don't have to go to work. However, where's the money for romance? Where's the money for travel? Where's the
Yeah.
money for fun? There
Yeah.
is none. You're just paying the bills. So, what I advise my students is go take your bills, double them, and that's really the passive income that you want to search for and work towards. If you got $5,000 a month in bills, then go to $10,000 a month in passive income. That way, you got $5,000 for travel, romance, and all the other fun parts of life.
I go a little bit beyond on that because when you are in that route, like just like yourself, you're now building your legacy. Um, you're doing it because you're enjoying it, right? I've seen so many physicians and um, busy professionals. Uh, they like it or not, they still have to go to the job, right?
Yeah.
Um, and a lot of times, what I've seen people or at least advise minors like you've got to figure out a way that you practice whatever you're doing, or your W-2 is on your own terms, right? You're doing it because you love it, and your other expense part or financial aspect of your life has been covered. Right? Like you said, so a lot of times people ask me like, "Hey, do you really think I should quit my W-2 and start just 100% passive?" Like, no, that's the first. You're gonna kill your only source of income unless your other passive incomes are covering 60% of your W-2. That means you want to figure out a way, start early, invest as much as smartly as much as you can with the right education. And if you cover that 60% of your W-2, maybe you start thinking about coming full time on the investment side. Because at that point, you can really build your legacy. You can build assets that can pay off, and you have an asset that is debt free, right?
Yeah.
Not advisable to everybody. If somebody understand what I'm talking about, that's really what your goal should be. Uh, but our conversation is not about telling people, "Hey, quit your W-2 and just become 100% passive investor." That's really not the case. Us as a real estate investor, we don't have favorites. But if I had to ask you top three, top five asset classes that you have seen or performed good and bad market both, what would you say?
Well, for something that performs well in both markets, I don't think anything beats apartment complexes. They produce, you know, good market or bad market, everybody has to have a place to live, as they say.
Correct.
Um, the interesting thing right behind that is self-storage. Why? Because if you go back to 2008 and 9, the Great Recession,
Mhm.
everybody's losing their home. They didn't throw away all their stuff. So during the recession, they were moving out of 3,000 square foot homes into 1,500 square foot apartments. They didn't throw their stuff out, they put it in self storage.
Correct.
And self storage boomed during the recession.
Yeah.
So it's relatively recession proof. Um, next comes those two are the top two in my opinion. But there's a third one out there, and that's senior living.
Mhm.
America is getting older. There aren't enough properties for people to live in. Some of them are very expensive, extremely expensive. My mother was $9,000 a month
Yeah.
for her Alzheimer's treatment and housing and food and
Mhm.
everything. Um, we're going to need more affordable, and the need is just going to grow and grow and grow as the baby boomers age. So those are the top three, in my opinion. When it comes to the others, like strip shopping centers, city centers, um, they're still strong,
Yeah.
but I don't think they're as resilient as those three.
Got it. So basically, you're saying residential real estate, single family or multifamily, um, they're going to be, in your opinion, going to be resilient for next upcoming 10, 20, 30 years.
Yeah. You go back to again to 2008 and 9. I bought a bunch of single family houses and the rents just kept going up and up and up every year during the recession.
Yeah.
You know, when the news was saying it's horrible, everything's bad, it's a this, that, and the other, and they're telling you there's no way to win. I was winning big in
Yeah.
single family and apartments.
Yeah.
So be careful watching the news.
Yeah.
They're there to give you the bad news, not the good news.
Absolutely. Um, we talked about how you help your members, students, and differentiate between good and bad deals. Give us an example, your favorite example in your experience. Somebody coming to you is like awesome deal, and then 6 months later turned out to be a horrible deal.
I bought a property. This was way back. This was my
Yeah.
first apartment complex. And I picked the thing up for 21,000 a door, including rehab, including
Wow.
rehab.
Wow.
It was so when it was all said and done, after about 3 months, 4 months, that property was in perfect shape. 10 units, 21,000. Sounds like a no-brainer.
Yeah.
Wrong, wrong. And the problem was really with me. I didn't know how to run an apartment. I had run over 100 single family homes and I was successful at that. And what I did was I made the mistake, the arrogant mistake of going, if I can run 100 houses, I can run a 10-unit apartment. No, you can't.
Yeah.
They're totally different. And I wanted to get this on here. So this is the perfect place to bring it in. It's a thing called lag. I teach my students about lag,
Hmm.
laziness, arrogance, and greed.
Hmm.
And those three things, lag, will destroy you. And what happened was I'm mismanaging this property. I can't get it to cash flow. We're just breaking even. And this guy had a course on how to run apartments, but it was
Hmm.
30 grand. And I was too lazy to take the course. I was too arrogant to think I needed it. And I was too
Yeah.
greedy to pay the $30,000 to take the course. So after about 2 years, I finally figured it out. And suddenly we started making money. But I could have learned that in a week if I'd have taken that class. But here it gets worse. A guy comes up to me and goes, I want to buy your apartment. I'll give you 35 a door for it. Well, I'd paid
Mhm.
21, so that's a $150,000 profit basically.
Yeah.
And I took it.
Right.
Big mistake. That thing was worth $689,000 and I sold it for 350. Again, if I'd have taken that $30,000 course, I would have known that that guy was ripping me off, but because I didn't, I got ripped off.
Yeah.
So you've got to have a sponsor, a leader, a syndicator that understands everything about the deals, about the market, or good deals can turn bad, just like that
Yeah.
one did. But that was, again, really all my fault because of that lag, laziness, arrogance, and greed.
You've been doing 100 houses. Just one landmine really brought you to realization that education was so extremely important. Um, other factor that I love about your program is that you have those experiences and you can point people in the right direction how to do it.
The first, probably somewhere between the first 7 and 10 apartment complexes that I bought, these were the small units, 10,
Yeah,
20, 30, 40 units, is exactly what you described. A mom and pop who didn't know what they were doing, they ran it into the ground, and then they go, oh, real estate doesn't work.
correct.
Well, I bought this 22 unit. They had had it for 7 years and never made a dime. That's their words.
Wow.
I made $2,500 positive cash flow the third month that I owned it, and it went up to about $4,000 a month over time because I knew what I was doing. So when we talk about people doing dumb deals and the dumb doctor deal, it really should be called the dumb high income earner deal.
Correct.
And these high income earners have a tendency to be a touch arrogant. And
Hmm.
they're like, ooh, I make a lot of money. I got a lot of money in the bank. I'll be a great investor. But that has nothing to do with it. It'd
Correct.
be like me saying, I've got $1 million in the bank. I make 1 million a year. I'd be a great doctor. It has nothing to do with it.
Yeah.
You got to get educated.
Correct.
And these, if you're a high income earner, the first thing you want to do is invest in a program that will teach you how to underwrite these deals, how to read a PPM operating agreement, all the things I mentioned before you ever put a dime up into a passive deal. You've
Absolutely.
got to know what you're doing.
Absolutely. I always say to my investors and our audience, when you're operating apartment complexes or any commercial real estate, whether you're operating it or not, meaning whether you have a third party to operate or you're operating yourself, there are about 37 to 38 action items that you have to do before you can even buy something and all the way
Yeah.
to sell it, right? And that includes what you said, legal PPM document, raising capital, identifying the deals. Uh, the deals, when it comes to apartment complexes or any commercial deal, the deals that you and I looking or be able to make an offer or have an access to make an offer. Unfortunately, the newcomers won't be. It will take them 10 years and a big team to get to that point, right? And that's why I joined the coaching program to know, okay, how do I really do it? Like I was one of those high earner professional before I started, and luckily I didn't take too long to get into a program to educate myself. Um, I cannot be a successful businessman if I don't have a training. So thanks for sharing that story, Steve. One more time, Steve, how people can get in touch with you. Um,
Anybody that wants to reach out, please just go to totalwealthacademy.com, totalwealthacademy.com. And what we do for newcomers is we have a free sample class.
mhm.
And what it does is it gives you a taste of how we teach as well as what we teach. And that way you can decide if a mentoring program like ours is worth it or not. That's totalwealthacademy.com.
Awesome. Thanks, Steve. Well, so it's an amazing experience today. Thanks for your time. Uh,
Thank you.
so thanks a lot, and thanks again, Steve.